Global shares rebounded today from their sharp declines yesterday as global investors wagered that the war with Iran may not last too long. But it was a dramatic day Monday with spiking prices for oil, which briefly got to nearly $120 per barrel, their highest level since June 2022. The S&P 500 fell, the Dow Jones was down, and markets in Europe and Asia were also sliding. This is all happening, of course, because of the conflict in the Middle East. And joining us now to tell us more about what this all means for Canadian stocks and our economy is finance journalist Bryan Borzykowski. Good morning, Bryan.
Good morning.
Thanks for coming in.
Thank you for having me.
It's good to see you. Now, it's hard to imagine how something that is so far away from us can affect what's happening in this country.
Right.
But explain it, because everything is so interconnected.
Right, and we can't do anything about it here, which just makes it even more difficult for Canadians who are sitting here, paying more at the gas pump, and it's beyond our control. So what's happening is that, the Strait of Hormuz is closed because of the conflict. That area has 20% of kind of oil passing through it, not the Canadian oil. We're making our own oil. We have, we trade with the U.S. when it comes to oil. So it doesn't really affect us here, but oil is a global commodity. And when things happen in the Middle East, it affects oil prices. They go up, and that affects gas prices here. Now, probably people are wondering, why does it affect gas prices here? I wish I had a good answer. But if you look everywhere, it gets more expensive sort of overall across the globe to produce. And even if it doesn't sort of here, gas prices are just based on oil prices. When they go up, we see gas prices go up here, and that's why we're feeling it. So while there's nothing much we can do here, it's just that global commodity. Most commodities are global. And so what you see when prices, increase in one area, they affect prices here.
Okay, how does Donald Trump say a simple phrase and the whole stock market changes?
So that is a good question, and there's no really good answer, because the market probably shouldn't be reacting to everything Donald Trump says, because we know that lots of the things he says might not be completely accurate, or may not, we don't know exactly what's going to happen here. But yesterday, we did see oil hit these high prices and then come down after he said that the conflict is going to be short-lived. Although in the same breath, he said, it could also continue. So we saw prices fluctuate. Today, just before this, Pete Hegseth said this could be the most, intense day of action in Iran, and we saw prices go up a little bit more. They're about $90 a barrel, the West Texas Intermediate crude, which is kind of the North American benchmark that we base our prices on. And so I think the market is just looking for anything to figure out, when is this going to end? Markets don't like uncertainty. They're nervous right now, and that's oil markets, that's stock markets, and everyone's just sort of waiting what is going to happen next so that they can kind of figure out where these things should be priced.
Okay, so here at home, we know the gas prices are going up. That's going to eventually trickle down to other commodities, such as food, which is being hauled obviously by trucks, other services that we can expect and products that we can expect. What else can you see this impacting? Yeah,
well, this is the part where it really can affect the pocketbooks of Canadians. First of all, is higher gas prices. We've seen over the last month, kind of the average gas price in Manitoba increased by 26 cents. It's gone even, there's been even a bigger gap if you look at different parts over the last month, but that's going to affect people a lot. But yeah, everything is shipped by ship, by plane. We could see airline tickets increase. Again, food. We're already seeing, inflation's come down to close to where Bank of Canada's 2% annual, but it's partly come down because gas prices have been so low over the last few months. So food prices, really haven't come down as much as we'd like. So if we see gas prices come up, that overall inflation number could get higher than it has been, and that is concerning for sure. So there's anything that's shipped, anything that comes through any kind of transportation.
So expect that inflation might tick up a little bit. We're almost out of time, but let's talk about your investments. Your advice is don't look at them.
Don't look at them.
Don't touch them.
Don't look at them. First of all, the stock market actually hasn't reacted that much. It's down a bit, and it feels like it's down a lot more. You see the headlines. It's only down like 1.5%. In Canada, it's about 3%, and that's not that bad. So don't look at your investments. If you sell out, if you panic, you'll never know when to get back in. It's easy to say, okay, now's the time to get out. It's impossible to say now's the time to get back in, especially in a conflict like this that could change at any moment.
Bryan, thanks for your help today.
Thank you.